We've got Arun Kumar. He's the founder and ED at Strides Pharma, joining in to talk about the record margins clocked in as well as a strong quarterly show. Good to have you on board now. Let's talk about what has led to the recovery, given the fact that we've seen some sort of a dramatic turnaround over the last few quarters.
Yeah, thanks, Sarah, for having us. It's always a pleasure talking to you guys. So specifically when we reset the strategy, it was all about doing less for more, as in focusing on products and markets that would give us significant margin expansion and yet allowing us to be the contrarian that we are as a company. And clearly the regulated markets where you see the industry struggling a little bit is a market that we've been focusing on. And we have been able to disrupt this with product selection, customer advocacy, and obviously market share. Consequently, there has been significant OPEX leverage and margin expansion, which has flown through, which has helped the growth, but also the quality of the business and obviously the EBITDA expansion.
What is your understanding of what is happening to the generic price trend? Because that perhaps is the biggest moving part for you. I mean, irrespective of what you're trying to do at a company level, if the generic pricing trend is against you, it's going to be a difficult environment to operate in then.
Surely it is. As far as we are concerned, if you decide to operate in specific niches, there are opportunities. There are significant product withdrawals, as in A&A withdrawals by companies. So there are pockets of product opportunities where there are shortages, there are price improvements, while generally you will see that the price pressure continues as a general commentary for the industry. But if you pick and choose where you want to operate and which markets you want to operate, I think there is an opportunity for any player like us to benefit from the disruption that's being caused.
Let's talk about the injectable business. It's a business which is a complex business, but it's a business which is highly regulated. Given that how US FDA, how US FDA requirements have moved, I would imagine for the injectable business, the entire US FDA stringent requirement must have only improved. How are you ensuring that your injectable business remains at par with the US FDA guidelines? Because whichever Indian company, Arun, we've interacted with, they are now finding it difficult to comply with the US FDA requirements in the injectable business.
I think compliance is not unique to a particular format or therapeutic dosage format. Compliance is common across different dosage forms. So if you want to operate in a regulated market, you obviously have to be compliant. Just for your benefit and recall, we built a very significant injectable business which we sold, and we announced our intention to get back to injectables post our non-compete, which just expired very recently. Consequently, in what we also see in the last 6 years since we exited the business, there hasn't been a singular player that has built a business of scale and size, and that could be for reasons that you articulated. Having said that, having built a business and having a team that has built a business back with us, I really don't see this to be a difficult segment to operate as long as you focus on building infrastructure that meets high level of compliance. We do have that, and I think that we should be all right from that perspective.
Now, we also understand that Dr. R. Anant Narayanan has been appointed as the managing director of the company. This is the second time you are taking a back seat. How should investors and markets see that as a signal?
Positively, because you need to build a legacy from where I have left or built the business to. Anand brings deep experience and pedigree that is required to run a business of our type, of our nature. And he has got over 30 years of experience in the industry with deep science and also running large P&Ls. And highly networked as an individual. So we strongly believe that Anant will add significant value to Strides as we build this out to an important player in the space.
All right, getting a move on as well. Can you just give us some sort of an outlook as to what the strategy is going to be for the company? As of now, we've seen increased penetration of the already approved products by entering some of the new territories and even further building your product portfolio. What is going to guide your growth?
Well, I think there are more legs to our regulated market play, both in the U.S., but more prominent expansion will come in the other regulated markets where we have been heavily invested in the last 1 year in terms of pipeline management. Clearly, the course correction in the emerging market play, which has taken a significant dip in the last 4 quarters, more by design, less by default, will see a turnaround starting this quarter. So we'll see an expansion in that business coming through. I think both continued market share expansion, new product launches, and course-corrected Africa and emerging market and institutional play will ensure that there's enough momentum for us to continue profitable growth at Strides.
Thank you for joining in and sharing with us that perspective with respect to a strong quarterly show from Strides.